Guide to Acquiring a Mortgage, the Do's and Don'ts of Property Purchase, otherwise called the Property Buyer's Guide, appraisal reports, and legal matters. We will also have a presentation from Construct Antigua Barbuda initiative for those persons who wish to do renovations or upgrades on properties that they are planning to purchase. Self-employed individuals or persons planning to start their own business in the future, we also have a special presentation for you, and that is entitled Finance Solutions for Self-Employed Individuals and Small Medium Enterprises. As the presentations are made, I'm sure you will have many questions. Please submit all questions in the chat, and our presenters will respond during our question and answer segment. We also invite you to show your appreciation, to the presenters by giving a virtual applause when each presenter has ended their presentation. Before we proceed, we have a surprise. We have a surprise that we're going to call an early bird surprise. And that award is going to go to our first attendee who signed in this evening. And that first attendee is Cassandra. Cassandra, congratulations. Now our marketing rep will contact you, Samantha Suttle. She'll contact you privately in the chat, and you can provide her your information because you have won an Amazon gift card valued at US $25. So congratulations again. Awesome, awesome. All righty. Our first presenter this afternoon will be Julia Joseph, one of our business banking managers here at CIBC First Caribbean. Julia has over 30 years of banking experience, commencing initially with Barclays Bank and transitioning into CIBC First Caribbean. She has functioned in several roles in Antigua and also in St. Kitts Nevis and the British Virgin Islands. Her main roles have been in the areas of human resources and personal lending, now transitioning into business banking. Please give Julia your undivided attention as she presents Homeowner's Guide to Acquiring a Mortgage. Julia, over to you.
Thank you so very much, Jackie, for your kind words of introduction. Are you hearing me clearly?
Yes, we're hearing you.
Thank you. Acquiring a home will probably, good afternoon, everyone. My apologies. Acquiring a home will probably be the largest investment that most of us will ever make. So how should we approach this? Is there a way to ensure a successful outcome? For the next couple of minutes, we will review the steps that should be taken towards purchasing your dream home. First of all, we encourage you to establish clear goals and a budget. What is most important to you right now? Is it home ownership, a comfortable retirement, supporting your children through their tertiary education, perhaps contributing to your church or charities, or maybe new adventures like traveling to exotic places? Whatever your goal, it is important that we ensure that they are SMART. That is, that your goals are specific, they're measurable, they're achievable, they're relevant, and they're time-based. You must also consider your income levels to ensure that you avoid overextension, remembering that failing to plan is planning to fail. Once you have established your goals, you now need to rank your goals by their order of importance to you. You need to determine what your priorities are, and then you list them in the order of their importance based on your desired goals. This creates focus for you and helps you to adequately allocate scarce resources such as your time and your money. So you may choose in the first instance to rank purchasing your home as number 1, and then acquiring your car as number 2. And then for number 3, you may decide to go on a well-deserved vacation and thereafter pursue other goals, such as perhaps advanced educational opportunities. Now that you have ranked your goals in the order of their priority for you, you now need to establish a timeline for achieving each goal. This makes working towards each goal manageable and ensures that you are able to track your progress throughout. So for your purchase of a home, you may decide that you want to have this accomplished by the 15th of October this year. And then for the purchase of your new car, you may decide to do that by May next year. And after that, you go on your well-deserved vacation next year's summer. So you have set your timelines, and it is now time for you to purchase your home. What do you do now? We encourage you to have a conversation with your CIBC First Caribbean Business Banking Manager or sales specialist. Our team will review your finances and your income to determine your mortgage qualifying limit based on your goals. Why is this important? To understand your mortgage qualifying limit and your monthly payments. Knowing how much you can afford will guide your selection for a home, and it will also help to make the process more efficient because you know the dollar value that you can afford. It will also help you to avoid overextending yourself because you know that you want to live comfortably and meet your monthly mortgage payments. Again, it can give both you and your realtor confidence that financing will be available once the conditions are met. So what is CIBC First Caribbean's offer? We offer you up to 95% financing, 95% financing of the cost of the property or the value, whichever is lower. This means that you would need to have a minimum of 5% of the purchase price of the property as your down payment or cash deposit. We also provide mortgage indemnity insurance for financing over 80%. This would require a one-off insurance premium payment from you. We give you up to 35 years to repay. Typically, the time between your current age and your 65th birthday will determine the term of your loan. We also offer low processing fees and competitive interest rates. So what will be the cost to you? We would have already mentioned your down payment of minimum 5%. And in addition to that, we would have the bank's setup fee, which is usually 1% of the loan amount. We have the legal fees, which are paid to the lawyer for preparing the charge document over your property as security for the loan. We also have, of course, property insurance over your property that needs to be put in place, which requires a premium payment. And that, of course, gives you fire and all perils protection over your home. Creditor life insurance, of course, is available to give you that mortgage protection and ensure that should anything happen to you, your mortgage can be repaid from that insurance coverage and leave your property free and unencumbered. We would see here, just as an estimate, that for a property valued at maybe 300, cost of value at 300,000, the total cost would estimate at about over 12,000 EC dollars. Whereas property costing maybe 600,000 would incur costs of over 24,000 EC dollars. Apart from these upfront costs, there are also ongoing costs. Of course, there is property taxes that you would need to remit to Inland Revenue on an annual basis, and your insurance policies will require periodic payments, whether annual or monthly. And of course, you would need to maintain and upkeep your property. What information do you need to provide to apply for your mortgage for purchase of property? First of all, you need to have your proof of identification. Ideally, your passport, which will provide a valid current picture identification, and details of 2 personal references, including the name, contact details, their relationship to you, and the time known. For proof of address, you can provide a recent utility bill within the last 3 months. Salaried employees, for you, your income is assessed by your provision of a job letter, recent job letter within 3 months, and your most recent payslips for the last full month. You would also need to provide confirmation of your assets and debts to include your last 3 months statements on all of your deposit and borrowing accounts from your financial institutions. You'd also need to provide proof, of course, of your down payment and the legal and closing costs that you're able to meet these closing costs. The Credit Bureau report may apply to you if you are an international client. Now, what if you are self-employed? Does that make a difference? What documents do you provide to confirm your income? As a self-employed person, we assess your business using your business's financial statements and the operating account, your bank statement that you use to operate your business from. Ideally, we would want to have your last 2 years' financial statements, including profit and loss, your balance sheet, your cash flow, and the notes to your financials. And the bank statements should also correspond in terms of the period that is provided with the financial statements, ideally, or at least for the past 12 months. Interim or management accounts may also be needed depending on the year-end date of your financial year-end. Specific to property purchase, the documents would be your sale agreement, which would be signed by both you and the vendor, and witnessed, of course, and dated. This would, of course, contain the particulars and the conditions of the property purchase and sale. Then we would have the valuation report. This would be prepared by an approved valuer and requested by the bank. The homeowner's insurance document assigned to the bank will, of course, be required once your loan is approved. Once you have spoken with us, we invite you to visit the CIBC First Caribbean Realtors Hub at www.cibc.com/realtors-hub. Here, you will have the opportunity to interact with many of our realtor partners, which will help to make the process of purchasing your home easier. And you also obtain more information on home ownership. Now, what if you already have a mortgage elsewhere? Then you may say you don't need to purchase, but then we would then ask you to consider switching your mortgage. Why would you switch your mortgage? Here are a few reasons. If your current mortgage rate is high, we can offer you a competitive rate, which may reduce your monthly payments, and this will give you more disposable income that you can use in many other ways. Another reason that you could think of to switch is if you have built up equity in your property, in your home, you can consolidate those high interest earning debts, such as credit cards and unsecured loan accounts, into one, which would help to release that cash with a lower repayment. And then you will have cash available to go towards renovating your home, investments, education, and so much more. Another perk for switching is that you can also get access to an interest-free loan to pay your home insurance. Our Easy Cover revolving loan gives you the opportunity to pay your home insurance in up to as many as 11 monthly installments. The loan is available to you interest-free for 3 consecutive years once you have signed on to or enrolled into